Hi, for libertyandeconomics.com, I'm Nick Sorrentino. Um, so this morning we had a slightly lower opening on the market, but I think the thing that's particularly interesting right now um, is we're trying to figure out if we're in recovery, if we're headed for what they call a double dip, which I have argued is just one big dip with a bunch of bounces on the bottom, or what. I mean, we're shaking out where we're headed here in the next decade. And right now, as of today, the 8th of March, the VIX index, the index that basically defines the amount of fear in the market, um, is pretty placid. It's quiet, which is interesting in light of the Greek crisis of recent weeks. And there's lots of stuff out there, but apparently, for the time being, the VIX is quiet. Um, What I find particularly interesting this morning is that crude oil is trading at 82.22 a barrel right now, and it has been trending up pretty solidly here for a while. Um, back at the very beginning of the recession, or when the crash started, I mean, oil was down. Um, it was half that. And some people argued that oil prior to that had actually gone to, I believe it was $146 a barrel, and some people argued that that was actually the trigger for. I mean, there were a number of triggers, but it was a major trigger for the recession that came. Um, so interestingly, oil prices are creeping back up. Um, what is also interesting is that gold and silver have, they had suffered a correction here recently. And gold had actually sold off pretty solidly in the wake of a number of things. But interestingly, George Soros at the Davos conference had come out and said, I think gold is the biggest bubble ever. And a lot of people took that as a signal to sell, and they did. And it went down to 10.50 an ounce, or a little lower than that, I believe. And interestingly, George Soros turned around and bought $700 million worth of gold after the prices had dropped. So, what does that tell you about where he's thinking, currencies and markets generally are headed? I think that's interesting. Currently, just for the record, gold is now at 1135. That's $1,135 an ounce. At $1,136 an ounce. Um, Also, silver is trading at 17.50, and it had been, $2 below that very recently. The thing that's amazing is copper. Um, Copper was $2.80 a pound um, very recently, and is now at $3.45 a pound. I mean, it's rocking and rolling. If you got copper, man, you're making some money. But anyway, just wanted to talk about why you should hold gold and silver in your portfolio. I'm a former financial advisor. Um, you know, the gold and silver, they don't earn you a dividend. Um, a lot of people hate precious metals um, for a number of reasons, which I won't go into. But for somebody who has a significant portfolio, let's say 100,000 or more, or you don't even need necessarily that much. Um, Remember, I am no longer a licensed broker, and this is for informational purposes only. Okay, so don't take my advice, run out and do it, and then get mad at me. All right, but it makes sense. Essentially, gold and silver. Um, if you're looking to speculate in it, that's one thing. Okay, but the reason why I believe that they're almost always a good purchase is that they're a hedging tool. you have a small percentage of your portfolio in gold and silver, and in the event of a catastrophic situation, it's essentially insurance. And when I'm talking about 5%, maybe 10% of one's portfolio in these precious metals, because again, if you know all hell breaks loose, that gold and silver is likely, not guaranteed, but likely to move in the other direction from your paper assets. And so you may be able to essentially hedge yourself against significant loss, or at least you will lessen your loss. So that's why you should probably hold some in your portfolio. Don't make it all your portfolio, but make it a piece and learn about it. Anyway, remember, be civil to people you disagree with politically. We're not going to move forward if we're all yelling at each other. Till next time.